Mortgage rates are around 7%, so how are builders like D.R. Horton advertising homes with mortgage rates around 4 and 5%? Either banks are lying to us or something else is going on. Today I'm going to explain why massive home builders are financing their own loans, why they're doing it, and why regular homeowners and people trying to sell their own home can't really keep up. And real quick, if you don't already know me, my name is Ryan, and after years of working shift work, nights, weekends, and holidays, I was able to finally reach that net worth millionaire status. So if you're interested in anything personal finance related, please consider subscribing. So mortgage rates are still sitting around 6.5% to 7%, but how are these large national home builders able to advertise home financing in the 4s and 5% range? I mean, seriously, you'll see a normal house listed by a local real estate agent, but in order to purchase that home, that existing home, you have to take out a traditional mortgage, and that's around that 6.5% to 7% mark. And then right down the road, maybe a D.R. Horton or Lennar home builder is offering a brand new home with a much lower payment. And this actually happened in the small town that I live in. D.R. Horton came in. Currently they have around 100 homes being built, and more are being put up for sale every month. And at first glance, it kind of looks fake, but behind the scenes, there's a pretty good strategic reason these homes are coming up for sale. And I personally know people that have purchased these D.R. Horton homes with the 5% interest rate, and they're not bad homes at all. But at first glance, that interest rate kind of looks fake, but behind the scenes, there's a very strategic reason they are able to offer these low rates. And honestly, these new homes being built by these national builders have quietly changed the housing market, at least in my area, and it's also been really good for their company stock, as you can see. So today I want to explain how these builders are actually able to finance these homes at such a low rate, why they can offer these low rates, why builders are struggling to compete, and why existing homeowners may be getting squeezed out of this kind of stale housing market. So as you know, mortgage rates have basically exploded from 3% to 7% the past few years. Back in 2021, buyers could get a 30-year mortgage for around 3%, and I actually took advantage of those low rates back right after COVID, early 2021 I believe it was, and I refinanced my home from 4.5% to 2.8%, which was a big help when I was trying to pay off my house. But today, many buyers are looking at rates around 6.5% to 7% for a 30-year loan. And that completely changes your payment. It completely changes the housing affordability. So let's look at an example here. So a $400,000 home at 3% principal and interest is roughly $1,680 per month. And at 7%, that same loan jumps to around $2,600 per month. So that's nearly $1,000 increase in after-tax earnings that you have to come up with every month for the same house, the same loan term. It's pretty crazy. And of course, in 2026, most home buyers don't really shop around based on home price. They shop around and look at homes that they're able to afford the payment on, not necessarily the price of the home, but the price of the monthly payment. And that's the key to this entire video, because these builders, D.R. Horton, etc., learn something. People may still want houses, but they can't afford the payment at these current high interest rates. And this is where companies like D.R. Horton completely change the home building game. A lot of massive home builders don't just build houses anymore, they finance them. They have in-house mortgage companies, and that means they can offer a lot of great incentives that regular homeowners that are just trying to sell their home can't offer. For example, a builder like D.R. Horton may advertise 4.99% interest rate or 5.25 for 20, 30 years, or temporary 3-2-1 buy downs, even when market rates are much higher, even double. Now here's the important part. These home builders aren't just getting some kind of subsidized free money from the government. They are often paying much more upfront to basically buy down the home buyer's interest rate. And this is called a rate buy down. This is where the buyer sacrifices some profit margin up front to lower the monthly payment for the home buyer and move their housing inventory much faster. And for giant builders, volume matters. For example, a national home builder like a D.R. Horton may have thousands of homes being constructed at one time, massive land costs, investors expecting sales growth, right? These are most of the time they're publicly traded companies. Investors want to see those quarterly returns, and interest expense on developments. And that means these large home builders need to move their newly constructed homes very quickly. Comparing it to a national builder, a local custom home builder may only have 5 or 10 homes being constructed at one time, kind of like spec houses, and maybe a few custom homes at the most. But compare that to a giant home builder that may have entire subdivisions just sitting there, and empty inventory costs money. This is another reason these large home builders have become so powerful. So right now, many existing homeowners, like I was stuck in their 2.5%, 3.25% mortgage. So they don't want to sell. I mean, why would they trade that 3% 30-year loan for a 7% loan? It just doesn't make sense. And that means resale inventory has stayed unusually tight in many markets, including my area. But these large home builders have built hundreds of thousands of homes in local areas, just like where I live. And now some of these builders have a lot more inventory available than the small local home builders or even just people trying to sell their own house. So imagine you're out there trying to buy your first home. So you can either buy that 10-year-old house that may have some AC issues with no warranty and a nice 7% mortgage rate, or you can go up the road and buy a brand new build, all these fancy incentives at a 4.5%, 5% interest rate. So which one are you going to go for? And I've heard it from a lot of people that these new homes are very attractive because of the lower payment, right? The new build starts to look a lot more attractive than buying a home. Even if the actual home price isn't dramatically cheaper, or if it may not be the most desirable area, just being able to afford the note means so much to a lot of people. And this is probably the one main reason that these large home builders have gained a good amount of market share in these local markets during these high interest rate environments. And I actually talked to somebody at my job not too long ago who actually bought a brand new D.R. Horton home solely based on the interest rate and payment alone. It makes that big of a difference, especially if you're already tight on your monthly budget. So with the higher mortgage rates, it has slowed the housing market down slightly, at least in my area, but it seems like these larger companies that are able to finance their own homes, keep their mortgages in-house at that lower rate, they're definitely thriving in this interest rate environment. Now, does all this mean that these home builder deals are actually bad? Absolutely not. Some buyers genuinely save a good amount of money when purchasing these type homes, especially if they plan on staying in the home for a few years. But if you're looking to buy a home, you should always consider these few things. Always consider the total home price, not just the monthly payment. Find out what you're paying for the home, get it appraised by an independent appraiser, and don't just focus solely on the monthly payment like most people do with vehicles. Find out what the house is worth, don't pay over that, and then of course have a manageable payment. Any HOA fees, and if they're going to add an HOA down the road, that obviously costs money to manage that. It may only be $100 a month, but that is something you will have to pay, or they will put a lien on your property. Property taxes, especially in new developments. First year for a new home, you're probably just going to pay property taxes on the land, the vacant land, which is nothing, and then that next year they're going to pop you with 100 times that cost when they appraise your house, if you will. So basically your property is worth $300,000, but when you bought it was only worth $10,000. So expect to pay a couple $1,000s more when they reappraise your home for property taxes. Insurance costs, I'm passionate about insurance costs. Always factor in what it's going to take to insure your house properly. Obviously, if you have a mortgage, you have to have property insurance, and that's something that you will have to have for the life of the loan, trust me. Any closing costs, obviously get a closing disclosure, find out what you need to bring to the closing table when you go to buy a home. And then future refinancing possibilities. Don't go into a home, don't commit to a 30-year mortgage unless you're okay with that rate and you're willing to pay that monthly payment indefinitely until you pay the home off, right? Because sometimes the lower rate is partially built into these home prices. And builders know buyers focus heavily on what the monthly payment is, not just other details, home price, etc. But back to the payment. The payment is what has been selling these homes, right? And that's why you'll see a lot of big flashy red and yellow signs saying move-in ready, 4.99% financing, and giant bold letters. The payment sells the house, not necessarily the sticker price of the house, but if people can afford a home versus paying rent for an apartment, they're always going to choose the home. But I believe that if somebody is just solely focused on that monthly payment and having to go the traditional mortgage route, keeps them in their apartment with their family with no backyard versus buying a house. People normally look past a lot of the finer details, if you will, to put their family in a better spot and especially a better home. Again, in summary, I believe this is one of the biggest shifts happening in the housing market right now. The largest builders have realized they aren't just competing on homes anymore, but that nice mortgage rate. So these home builders have figured out they're really competing on the financing cost, and regular homeowners like you and I just trying to sell our home, we can't offer these kind of incentives. So while these high mortgage rates have actually hurt a lot of the housing market, it definitely has strengthened these large home builders that can finance their own homes that they build. Anyway, I appreciate you watching the video, and I'll see you again next week.